I'm Terry Ryder, founder of hotspotting.com.au. Today I'm speaking to Mark Shorrock of Bluestone Property Management on a topic that's very pertinent for these times. The virus crisis has created many issues for property investors, which have been compounded somewhat by the tendency of state governments to make up new policies on the run without necessarily thinking through all the consequences for everyone affected. Now, my view is that investors should always appoint a professional property manager to look after their properties, but right now more so than ever because of the unusual times in which we're operating. It's not a level playing field and the politicians keep moving the goalposts. So let's explore some of the issues with my special guest Mark Shorrock from Bluestone, and as we do so, we'd like your participation. You can type your comments or questions into the chat box. And if you'd like to ask your question live and have a chat on air with Mark and myself, you can click the put your hand up button in the chat box and we can unmute you and have a discussion. So Mark Shorrock from Bluestone Property Management, welcome.
Oh, good morning, good afternoon, Terry. Thank you for having me.
Most welcome. As I mentioned in the introduction, the playing field is a bit lopsided and the goalposts are moving all the time. It must be very, very challenging for someone in your position to keep up on top of everything, but even more so for investors.
Yeah, look, Terry, I guess the easiest way for me to explain that is that I'm a second generation agent with over 21 years of experience within the industry, most of that within property management. We, to be honest, struggle to keep up and interpret the standard legislation as it is because there are so many variables within property management. We have different property, different tenant, different owner, different property manager, and different agency can create any number of outcomes. Then we get a crisis like this comes along and throws a cat amongst the pigeons, and when the legislation is already somewhat ambiguous and confusing and can be interpreted by multiple parties in different ways, then you go and add an extra layer of uncertainty to that, between the scaremongering, whether intentional or not, from media, and some sort of sense of sugarcoating from your property manager per se, or your agency. Then somewhere in the middle there is what is relative to you as the investment property owner.
So what are the most pressing issues that property investors who are landlords are facing at the moment in the current circumstances?
Yeah, the biggest one would be the fact that, and look, to their credit, the government has handled the situation very, very well. I'm certainly not intentionally going to criticise the job that they've done here today, and or any of our governing bodies like the Real Estate Institute of Queensland or the Real Estate Institute of Australia or whichever state you're in. I think for the best part, the federal and state governments and the industry bodies have done an extremely good job. The problem, as I see it in a nutshell, was that the federal government announced that tenants should be able to seek some sort of rental reductions from owners, and owners should be forthcoming in sitting down and negotiating with tenants to provide this, like a reviewed rent to their tenants, for the purpose of keeping a roof over their head and for the purpose also of keeping a tenant in the investor's property. The problem with that was that it was widely broadcast across news and media, and we had a whole heap of owners and tenants trying to get together. We had a bunch of tenants who requested financial hardship due to coronavirus. That we were able to manage that process. Now, some agencies, I'm confident, have done it better than us, but I also know that there are a lot more agencies that haven't handled it as well as what we have. Now, if you're a private owner or a private landlord and you manage that property yourself, it's, as I said before, challenging enough to navigate the legislation normally, let alone now when we've got an extreme scenario on our hands. So to make a point there is that some tenants prematurely were able to negotiate rent reductions with all the best intentions with landlords. And whether that landlord negotiated that privately or they did it through their agency, through just being naive to the process or not thinking it through thoroughly, agreed to a rent reduction with the owner. Now, that may or may not have been facilitated correctly. The correct way in Queensland, and it would be somewhat, the same in other states, I would imagine, due to contractual law, is that both parties should have mutually terminated the first agreement and then entered into a new agreement, being the lease, for a new amount. Now, the problem with doing that is a couple of things. Is it limits the owner's ability to claim compensation themselves. So if you can't prove that there's a loss, and by that I mean that, let's say the rent was $400 a week, and an extreme scenario would be that the tenant renegotiated the rent for 6 months at half of that at $200 a week. Now, to make an insurance claim, you need to be able to show your insurer that you are at a loss. And to do that, you need to be able to show the difference between the current lease at $400 and the current rent at $200, and an arrears accumulating over any period of time to an amount which you can make a claim on. Without that, then the owners lose the ability to be able to make an insurance claim.
So the correct way to do it is to basically scrap the existing lease and draw up a new one with the new rental in it. Basically, that's the only change you would make, but you need to actually do it that way.
Yes, that was initially the only way to do it. Now, in Queensland, on the 27th of last month, they sat for Parliament on the 22nd, and on the 27th, they released a new form, which is called a variation agreement. And that was a variation to the original lease, which meant that, before that was done, as I said, some owners and tenants got together and renegotiated with best intentions rent reductions. Owners have inadvertently jeopardised any claim of loss to insurance companies and potentially government assistance and so forth, or for a QCAT or I think they call it a VCAT, I'm not sure what it's called in New South Wales, any claims for loss in small claims tribunal. The introduction of that variation agreement is good. However, you have to put a start and an end date on it. We just don't know at the moment when this is going to end. We don't know when tenants will get their jobs back or when they will get employment back. So what we're in the process of doing, and with some we have renegotiated and we are re-entering into an agreement weekly. Others we are doing for a month, and some others where tenants are confident that they will be put back on the books and re-employed within a longer time frame due to the restrictions lifting and so forth. We've negotiated them to be longer, but either party has to notify the other when their circumstances change. So that tenant is required under that agreement to come back to us and say, oh, I've started my job early, Terry, I'm in a position to pay an increased amount of rent, and then it would revert as quickly as possible back to the original agreement.
Yeah. And in practice, is that working out? I guess it's early days in these agreements, these changed agreements, but are you finding in practice that it's working well?
It is. It's just the timeframes, how long to do it for. Some owners are naturally cautious about doing it for longer than what they think. Why would you give 6 months if the tenant might return to work in 3 months? They don't want to be receiving less rent. It relies on the tenant to let the owner know that their circumstances have changed. We had some assistance packages here in Queensland, one being that was up to $500 a week for 4 weeks from the Queensland government. Now we manage about 350 properties, and we had, I would say, 60 or 80 tenants mention financial hardship due to coronavirus. We had 26 of those 60 to 80 formally sort of request assistance in the form of an email. Out of those 26, we designed a very thorough application form, which is designed, and we ultimately working for the owner of the property, the landlord, and it was designed for the tenant to complete that and provide supporting documentation, and so the owner can make a fair assessment on offering some assistance to the tenants. And there was no hard and fast rules around how that worked. The government is encouraging owners and tenants to come together and reach an agreement. Now, out of those, we only had 2 people out of those 26, the tenants actually submitted an application, and only one of those 2 qualified or were eligible underneath the government's rules and regulations, temporary rules and regulations, which in Queensland, while I think about it, expire at midnight on the 29th of September. So we've been able to mitigate a lot of loss for our owners through the process. We forwarded on all the applications from the tenants to the owners, and we notified them that their tenants had made a claim for financial hardship. We kept telling the owners and the tenants that this was unknown, uncharted territory, and the government and the industry bodies were working on temporary legislation to protect all parties. And once that legislation was released or passed through Parliament and the forms were handed down, we communicated back to the owners and tenants so they can make educated, well-informed and strategic decisions. Yeah. So look, we think, but as you can imagine, I'm sure everyone can appreciate it, an enormous amount of work is going into handling that process. We're doing 2, 3, 4 times as much work to manage the tenancy as what any agency would normally be doing, because everything we do takes so much longer and we're doing it for the first time.
Yeah. So in terms of those situations where a tenant might claim some kind of hardship because of the virus crisis, what's a typical situation in terms of what the tenant comes to you or the landlord and says how much of a reduction is being sought in a typical situation?
Yeah, so a sort of a textbook explanation would be, a couple with some children and one or both of those people have lost their employment or been stood down. They may be on the job seeker or job keeper payment system, and their ability to cover their rental payments has been limited or restricted. They can make an application to the owner. We say, always the rhetoric in property management is if it's not in writing, it doesn't happen. It didn't happen. Then we notify the owner that hey, Terry, your tenant has made an application for a hardship. Just so you know, we've forwarded off an application to them with links to the local governing authorities. We've provided links to Lifeline, Queensland and state, federal government financial assistance, plus some general information around welfare, and the tenants can go through that. Now, they had to provide the 3 most recent pay slips, but basically the same information that a tenant would be required to provide when they initially applied for the property. Proof that they'd applied for any government assistance, either the temporary assistance made available by the government. Just for the record there, none of our tenants qualified for that. We actually don't know how the Queensland government structured that. We do seem to think that it was possibly only available for people's like non-Australian citizens who couldn't qualify for job seeker or job keeper. So then we asked them to provide evidence of those applications for job seeker, job keeper, bank accounts to show how much they're receiving in the way of benefits. Now, in Queensland, the tenants needed to be able to prove that they had reduced income by 25%, and or that there was a means test, which is the 30%. So the rent can't form more than 30% of their net income for the household. Now that's leaseholders on the household. So in Queensland, if you've got 4 people in a property but only 2 of them are on the lease, it only applies to the 2 people on the lease, not the 2 other people living in the property. There's some additional things around protecting domestic violence situations and break leases. So, for instance, the normal break leases rules don't apply if the tenants on the leases' income has been affected by more than 75%. In that case, they make a payment of 1 week and they can move out of the property without any further penalty.
But in that hypothetical scenario where you might have 2 parents both working, one loses their income for the short term, what are they typically asking for from the landlord? Like a 20% reduction in rent, or what's the standard situation?
Yeah, look, we've seen everything from $10 to $20 a week to 50% of the rent. I would say around about a 25% reduction has probably been the average to give everybody some sort of indication. Now that some owners are in a fortunate position to be able to offer assistance to their tenants even though they haven't asked for it. Some of those tenants who have asked for assistance have been and owners that are fortunate enough that they are financially stable or they own properties outright and have been able to, provide assistance to the tenants. However, in other situations, we did have one, luckily, that didn't come off for all parties, but we did have a tenant that mentioned that they may be losing their job. We had an owner that had lost their job of the same property due to coronavirus. That would have been a nightmare to try and manage because the owner can't make any repayments on the loan, and the tenant couldn't pay very much rent. And but fortunately enough, that tenant wasn't stood down for their position, and they were able to maintain reliable, steady payments and stay on top of the rent.
Yeah. So the typical situation might be the tenant seeking maybe a 20-25% reduction in rent for a short term, and most landlords amenable to that would take the view that it's better to keep a good tenant in place and help them through that period short term rather than seek a new situation.
Yeah, most are, but some aren't. Some aren't. They either just aren't compassionate or they aren't in a position to provide any assistance. That there's a shortfall between the standard rent and their mortgage repayments. This would be a good time to jump on. I noticed that Karen's asked a question up there, and I'll try and cover some of this, or the first part of your question in this reply, Karen, is that, with so many different lending institutions around, and they're not advertising, as people would know, they're not advertising the assistance that they're offering to their lenders. So you need to go and ask your financier what assistance is available to you. We're seeing a lot of people these days on interest-only loans. Now, you can't really, we can't provide financial advice, and I'm restricted from providing financial advice, but just providing some general information for people is that our understanding is that on the interest-only loans, the majority of them, if not all of them, you can't really freeze or defer your payments because they're interest. So if you either don't pay it for a short period of time, that interest is just added on to the future payments, and the term of the loan isn't extended. If you're on principal and interest, that's different. But there's a bunch of different scenarios. As I said before, every situation is totally unique from the one before.
But Karina's question sort of does speak to the heart of what we're currently discussing, I think, Mark. And the first part of that question is, are the tenants supposed to pay back that rent reduction at some point? Or is that just a loss to the landlord?
Yeah, fantastic question, Karen. And one I'm sure that the majority of people are listening to and keen to hear the answer. So, as crazy as it sounds, in Queensland, the government actually suggested, even though the federal government has said that, look, we'll need to come to some arrangement between owners and tenants, and that, owners aren't being let out of their mortgage by their mortgagees. They are only having deferred payments. That the Queensland government's initial proposed response was to let force owners to let tenants waiver their rent. Now, industry stakeholders, ourselves as an agency, a bunch of agencies, some landlords, and our peak governing body, the Real Estate Institute of Queensland, lobbied towards the Queensland government and luckily got that overturned. Another crazy one they had was that tenants wouldn't be provided to provide documentation to substantiate their request. Again, just a ludicrous proposition from what I believe is a disconnected state government, but to this particular situation. So fortunately, they saw the light of day, and we said to them that, look, owners, what's the good if an owner can't pay back the mortgage? They have to sell a property. The tenant doesn't have an investment property to live in. So in Queensland, unless a owner chooses to let a tenant off paying the rent or waiver the rent, they come to an agreement to defer the rent. So the short answer is that yes, in Queensland, unless an owner is extremely generous or fortunate enough financially to be in a position to give the tenant some rent, then an agreement is reached where the two parties come together and the tenant pays a reduced amount. Now, I'll give you a quick scenario of the rent I was trying to renegotiate this morning. I've just got the figures on the top of my head. we've got a tenant that has hardly paid any rent for a couple of months. Their normal rent is $450 a week. They've been sort of paying $100 here, $200 there. Now that they've got some government assistance coming through in the form of job seeker, they offered to pay $169.90. That wasn't enough. The owner, who was on an interest-only mortgage, their minimum repayments were about $1,350 per month, which is around about $310 a week. So you can imagine there's a fairly decent shortfall between the two. We managed to get the tenant up to agree to paying $225 and then $275 a week, and there's still a $40, $50 shortfall there for the owner, which they can accommodate in their financial position. However, the amount of rent that as the arrears that has already accrued over the last 2 months is in excess of $2,000 and likely to be about $2,000 over the next 3 to 6 months while they make those reduced payments. Now, that tenant and the owner have, I'm pretty confident, reached agreement where that once they get their job starts back up again, they will go back to paying $450 a week plus an extra $50 a week for around about 18 months. That'll take that tenant to pay that money back to the owner.
Yeah. So just getting to the heart of Karina's question there, in the scenario you've just described, does the tenant have to pay back the rent that they haven't been paying for that period, or is it just a loss to the landlord?
The answer is yes, unless the owner is in a fortunate enough position to be able to let the tenant out of some or all of that shortfall. So if it's handled correctly as well as an agency, we need to make sure that we document this correctly. So we've notified tenants that under the legislation in Queensland that we are required to protect the owner, our client, by breaching the tenant when they fall into rental arrears. So all of these tenants, even though they've made a request for financial hardship, they've made a claim for hardship, which might currently be under an assessment or even been assessed as eligible, until an agreement is reached between the owner and the tenant through the variation agreement or through terminating the first lease and redrafting a new lease, then the tenant can be held 100% accountable for rental arrears.
Okay, so at some point the tenant does need to pay back the rent that has not been paid. But the other part of Karina's question relates to the ability to make claims on a landlord insurance policy when you're in that kind of situation.
Yeah, so that is another good question, Karen, and one I'm sure lots of other people have thought about asking, and is that to make an insurance claim, well, firstly, you need to have landlord protection insurance. So that's something we recommend for the cost, is a must-have for all investors, because it is an investment into covering situations outside of our and your control. There are some things that as an agency and an owner you just cannot control. So like this, for instance. However, so firstly, you have to have the insurance. Secondly, it has to be handled, the process has to be followed by an agency. So once the tenant falls into more than 7 days in arrears, on the 8th day, in Queensland, it issued with a notice to remedy breach, a Form 11. Now, if the tenant doesn't remedy that breach within the prescribed timeframe, then they can be that, and by that I mean pay the rental arrears. Now, they only need to pay the amount that was on the form at 8 days. So a week later, they can pay 2 weeks worth of rent, not that third week. They remedy that breach and we go back to the start again. However, if they don't remedy that breach, then they can be issued a notice to leave, and that's within 7 days. Now, then we need the tenancy to have come to an end, and for that tenant to move out, for us then to be able to go and lodge an insurance claim for the owner for loss of rent. There are a couple of other scenarios which I'll touch on really quickly. If anyone wants any more detail, they can either ask a question or I'll naturally make myself available after the webinar for anyone to give me a call or shoot me an email. Is that when the tenant, if a tenant has made a mention of financial hardship in Queensland due to coronavirus and they fall into rental arrears, a new form has been designed which is a preliminary to that other notice to remedy breach, and it's a show cause notice. So that's sent out and that says to the tenants, listen, we understand that you might be in financial hardship due to coronavirus. If so, please let us know. Then you'll have to fill out an application, which we provide to them for assessment for the owner to see if you qualify or if you're eligible. If they do that and they remedy the breach, then we go back to the start again. Now, we don't know how many times a tenant can go through that cycle. Theoretically speaking, they could probably fall into rental arrears, be breached, remedy the breach, and keep going around and round. However, at some stage in Queensland, it's the 29th of September, unless extended, that legislation, the temporary legislation, will come to an end and the standard rules will apply. Another point I'll make, Terry, before I forget to talk about it, is that under the variation agreement, again, I'll say in Queensland, is that, and I wouldn't be surprised if it's somewhat similar in the other states, if the owner and the tenant come to an agreement to pay a revised weekly amount of rent and a payment plan, so they're the two parts of it. So for this other tenancy, it's $275 a week until the tenant starts their job or receives their first pay slip is the next thing. Once they receive their pay slip, they go up to $450 a week plus the extra $50 a week, so $500. So if they default at $275 or at $500, the standard rules apply. So the government's done a pretty good job at working with the peak industry bodies to do everything they can to protect owners and tenants, I believe.
Yeah. So just finishing off that question from Karina, when the tenant stops paying rent, that's a clear insurance claim, I would have thought, on the landlord insurance policy. But if the tenant's paying a reduced rent, say half what they would normally pay, is that an insurance claim on the landlord's insurance policy in your experience?
Yes, if they didn't form a variation agreement and they didn't terminate the original lease and enter into a newer lease at that lower amount. As I said originally, sort of initially in the first part of us talking, Terry, was that some owners agencies inadvertently reached agreements with tenants, and they did it one of those two ways. They either did it properly through a new lease or they didn't. If they did it through a new lease, the owner can't make a claim on insurance.
Right.
They can't prove that they're at a loss between the deficit between the lease amount and what the tenant has paid. Then we've got the other option. So we believe if we've protected the owner by either not coming to an agreement with the tenant, which in some cases we haven't been able to do, so the normal rules apply. But the owners are being lenient because two things in Queensland: you can't evict a tenant for rental arrears if they've been COVID affected until the 29th of September. If any lease of any tenancy that's COVID affected lapses between now and then, it automatically extends until that date in Queensland. So there's still some protection there. But, as we saw, we had 60 to 80 tenants mention hardship. That's fine. We had 26 formally apply, actually formally request in writing. And out of those 26, only 2 actually applied. So I think the uncertainty that was around in the early days was that we had a bunch of tenants, and look, there are people who take advantage of every situation, owners, tenants, and agencies. Unfortunately, that's just human nature. We had some tenants who were asking for rental reductions that they didn't even lose their job. They just said, "Oh, well, everyone else is asking for it. I'll ask my owner as well."
So, given that we're now talking about that situation where an insurance claim might be appropriate, Marina's asking the question that insurance providers seem to be closing their availability to insure for loss of rental income. And it's certainly a situation, Mark, that I've encountered renewing one of my insurance policies on an investment property that I think because I've had so many claims for this thing in the COVID-19 period that some of the landlord insurance policy providers are starting to be reluctant to continue providing that part of the cover. Are you sort of getting any feedback on that?
Yeah, that's 100% correct, Terry. So we deal primarily. We will try and recommend to our investors or any investor. I recommend to any investor to take out specific landlord protection insurance. Most banks and general insurance providers don't provide the specific landlord protection that most owners need to cover them for all scenarios. The two companies that we work closely with are Terry Shear and EBM. Like any competitors, they have varying differences and subtle, pros and cons dealing with one over the other, but generally they're for the best part the same. Now, our understanding is, and again, there are a lot of criteria that needs to be met for an owner to be able to make a claim. Now, our understanding is, for the first part, is that most of these insurance companies, even the non-industry specific or landlord protection specific insurers like Terry Shear and EBM, have been able to wriggle out of paying any loss of rent due to what's known as a force majeure clause or an act of God clause. So much like the 2011 floods, where a lot of insurance companies sort of wriggled out of having to pay out claims due to the floods because they said, oh, look, there was, rising water was different to overland flow, which was different to rivers or creeks breaking their banks. However, within the industry, and there's a little bit of talk and hope around the fact that the government, state and federal, might step in and force these big insurance companies. Now, you've got to remember the likes of these companies are backed, by some of the biggest corporations and insurance companies in the world. Naturally they'll try and get out of paying any claim they can, but we're a little bit quietly hopeful that they might be put under some pressure from the government to pay out, as long as I said before, the agency or the owner has followed process, and that, as I won't go over it again, but there needs to be a process that follows. So for an insurance claim specifically, you need to have issued the breach notice, the notice to leave, and the tenancy needs to have come to an end for you to be able to make a claim for insurance.
Okay, but the second part of that situation, Mark, is whether in the landlord insurance providers are going to continue providing cover for loss of rental income. It seems like they're trying to, when policies come up for renewal, they write new policies, not provide that cover anymore.
Yeah, that's correct. They've effectively closed their doors. They were inundated with requests, and I think overwhelmed by the number of requests and workloads. Plus, also, like everybody else, a little bit unsure on how to handle the situation. So, unfortunately, if you didn't have the insurance beforehand, it's extremely difficult, if not impossible, to get it now. And even if you did have it, you may not have even been covered.
Yeah, and Miriam's making the point. They've upped their landlords' insurance premiums by 15 to 18%, but aren't providing as much coverage. My experience with the recent policy renewal that I referred to, Mark, is that the premium increase was, I think it was 31% comparing the premium for last year, and the justification for that primarily was the number of claims that had on a loss of rental income. So there's something for landlords, investors to be aware of, that next time they renew their landlord's insurance policy, that there may be a substantial premium increase. And what would you suggest people do in those circumstances? Shop around, see if they can get a better deal elsewhere?
Yeah, look, it's. I actually just wrote an article on this yesterday. I might be able to share it with you, Terry, and you can share it with your listeners and your audience. But so we, under the Financial Services Act, again, we're restricted from providing specific advice and financial advice. So again, this is just general advice for everybody. Is that, shop around, do your research, compare apples with apples. Now, as I said before, the likes of the tack on landlord insurance provided by some of the major financial and smaller financial institutions is very different from that is provided by the landlord specific providers like Terry Shear and EBM. Now, the cost is relative as well. So what we see is, to give ease of an explanation, an owner might have building insurance for $1,000, and for an extra $100, they get landlord protection insurance tacked onto the top. However, when you read through the fine print, you're only getting $100 worth of insurance, and it doesn't cover most of the critical situations or scenarios that we might get into as an agency or with your tenancy. So, cheap insurance can end up being very expensive. I suggest that that is better than nothing. However, those landlord policies that are tucked onto, insurance provided by car companies, NRMA, RACQ, the big four banks and other major financial institutions is just not the same as what is provided by the landlord specific ones. So around about $350 a year it is, and it's a tax deduction. So, that you can write that off with your tax, or most people can. Speak to your financial planner, your tax accountant about that. But that's a small investment for an owner of an investment property. Now, people don't balk at spending that sort of money on a car that's worth 1/10 of the value. But again, even if you had insurance in this situation, unless the agency followed the previous legislation and the process, the updated temporary legislation and the process, that unfortunately owners might find themselves in a position where they're still not protected by their insurance because their agency has missed a crucial step in the process. So,
yeah, there's just a point of clarification there from Karina, and I must admit the question also arose in my mind in terms of the scenarios that would allow you to make a claim for loss of rent and scenarios that don't. So you're saying, are you saying that you need to renegotiate the rent with the affected tenant? Once you do that and create a new lease at a different weekly rental amount, you can't make a claim with an insurance company. Is that what you're saying there, Mark?
Yeah, so look, let's say, I think I'm getting this right, Karen, and as I said, more than happy, you'll have my phone number at the end. Flick me an email, pick up the phone and call. Let's say we renegotiate the rent now for a reduced amount and the tenant falls into arrears, and then they pay the difference, and they're not still in arrears come 30th of September in Queensland, and you don't issue the form to remedy the breach and the notice to leave, and those rental arrears have accrued, and the tenant stays in the property, and you say, oh, well, look, okay, we'll let you continue to live in the property. You've been a good tenant. These situations and circumstances were outside of your control, and they stay in the property for another 1 or 2 years. Effectively, that landlord can't claim on that loss for insurance or until the end of that tenancy.
So the only way to make a claim, which is, again, the second part of Karina's question, the only way to claim is to evict the tenant in the tenancy, and but the problem is that some state governments which aren't allowing landlords to evict their tenants in the current circumstances. So there's a bit of a problem there for landlords, I would have thought.
Yeah, there is. That is. So the short answer is, yeah, look, you can't. This is my understanding of it. Look, now there is differences from state to state and difference from one insurance company to another, but generally no insurance company will pay out unless you've issued the notice to breach, the notice to leave, and you've got an end of the tenancy.
Yeah, okay. So Hema is asking a question. Tenants on a temporary visa, not entitled to rent assistance from the state government, can only cover a portion of the rent, and the rent's now 2 weeks overdue. What are the options the owner has to recover the rent if the tenant continues to avoid making payments?
Yeah, I'd imagine it's fairly similar to Queensland, whereas there are sort of 5 or 6 classifications. I'll just hold it up here for you really quickly, and I can circulate this too, but there are these classifications a tenancy must fall into before they can be considered for either the 25% loss of income for the leaseholders or the 30% threshold test. Now, one of the ones up the top here is if the tenant is restricted from leaving the country. Remember, the federal government requested all non-Australian citizens to go home. And the other one was if you were a tenant, international student or tenant, and you did want to return back because, you could still get back in, even though the government was recommending not to. You couldn't get back into the country, then you automatically qualified for the next step. Now, you need to just research the Victorian temporary legislation, but I know that Queensland is very similar to New South Wales, and therefore I would be surprised if Victoria is much different. So then the tenant would need to provide evidence in writing and make a formal request that their income has been affected by more than 25%. Then you may find yourself in a position where you can't ask that tenant to leave, or evict them under the normal rules until the end of that temporary legislation are lifted. And then if it's been handled properly, they'd still be responsible to pay those 2 weeks rental arrears back. You can either come to an agreement with them before or afterwards. I think this is a good time, Terry, to mention to Hemmer and Karina there, that in one of these cases, so this tenancy that I talked about today for us, we did as was recommended by the Queensland government and the federal government, and it sort of makes sense that they were recommending that owners and tenants come together, and they're begging and pleading owners and tenants, please come together and reach an agreement for all parties, keep a roof over the tenant's head, keep a tenant in your property. Then they said, look, if you can't come to an agreement, you need to file for mediation with the RTA, Residential Tenancies Authority. Now, if you don't get, and we will hold a teleconference with you and the tenant, what we call conciliation. Now, I got the feeling that we weren't going to reach agreement with this tenant, and so I made application for Residential Tenancies Authority mediation, conciliation. By doing that in Queensland, then you receive the first call from the RTA to talk about the case. Now, I took a call from a lady at the RTA called Karen, and she basically was sort of beating around the bush with me, sort of saying that, listen, we don't have the resources. We allocate up to 1 hour for these types of cases, but we don't have the resources when it's in relation to rent. And I said, well, that's unusual because the government is recommending that this is the process that we follow when we can't negotiate a suitable outcome between owners and tenants. She said, yes, I know. And she said, sort of kept beating around the bush, but I eventually got Karen to admit that in a roundabout way that as far as the RTA is concerned, and or if this was, to progress on through a notice of unresolved dispute, which we got to QCAT, so Queensland Small Claims Tribunal, that as far as they are considered, there's a legally binding agreement or contract, lease, between the tenant to pay a prescribed amount on the lease, $4.50 a week, to the owner. So that my understanding of that, and again, I'm a second generation agent, I've been doing this for over 21 years, is that as long as the agency or a private landlord, you handle the process properly, then you should be protected. If you go to mediation, it's a process that you can't get away from with the RTA. You need to have, before you apply to QCAT, you need to have proven that you've gone to mediation. They give you this notice of unresolved dispute. Then you make an application to QCAT, and then you go to QCAT. Our understanding is the adjudicators cannot rule on an owner's financial position. There's a legally binding contract between the owner and tenant for the tenant to pay the owner a certain amount of money. If the tenant doesn't pay that money, even though the legislation's temporary and has got tenants protected until the 29th of September in Queensland, after that, all bets are off and we're back to game on again. So, but parties, landlords need to be mindful of the fact that, we've got, you might be better to come to an agreement to keep that tenant in the property at a reduced amount with a payment plan, because if you kick them out, the wait time for QCAT at the moment is 20 weeks plus. The property could sit vacant for 2, 3, 4 weeks, could sit vacant. If we see an influx of properties becoming vacant in the start of October because a bunch of landlords have kicked their tenant out, then rental demand's not going to be in landlord's favour. Returns will be, the rent will be low, returns and yields will be low. You could, in effect, end up in a much worse position than you are if you could come to an agreement with your tenant to pay a plan, to stick to a payment plan.
Okay, I just remind people who are watching and listening that if you'd like to ask a question, you can actually put your hand up in the chat box, and we can unmute you and we can have a live discussion to talk about your particular issue. So be mindful you can do that if you'd like to do it. Perhaps we could talk about some of the market issues. One of the realities impacting on rental properties in recent times is there's been an influx of properties into the rental pool. People who previously were using short-term letting, Airbnb, for example, now seeking longer-term tenants. What's that done to vacancies? It seems to me that vacancy rates generally around the country are still, the national vacancy rate is 2.6%, which is acceptable, but I guess it differs from area to area. What are you finding in the markets you deal with?
Good points, Terry. So we've seen, our office is centrally located. I can see the city just outside my window here. We're about 5 minutes to the north of the CBD in Brisbane, and we manage properties from Logan, Yarrabilba, Ipswich to the Bayside, all the way up north to Narangba, Caboolture. Now, mention that primarily because we've seen vacancy rates in and around the city rise considerably higher than those in the outer lying suburbs. Now, the primary driving force behind that, I believe, is the fact that, and to give you an example, I think we've seen them go from around about 2.5 to 3.5 or 2.8 to 3.8% in inner city, and so around about a 1% increase, and about a third of that as far as the outer lying suburbs, and a blend in between. Now, the primary contributing factor for that was that twofold, is that a lot of the businesses affected by the shutdown were inner city businesses, the bigger corporations, and they have people working from home. The second is that, and some of these students, there's also university areas, inner cities, accommodation for the universities. A lot of universities have been closed down, and the students have moved back home with mum and dad. The third factor, which a lot of people didn't take into consideration, and I told everybody I knew sort of 6 to 8 weeks ago, was that Airbnb. So people had Airbnb, they had a property which traditionally like a long-term, or what we call in Queensland a fixed-term tenancy, and they converted it to short-term Airbnb, and very profitable. But then when an event like this came along, the bookings dried up, they have gone back to long-term accommodation. We've also seen hotels. So we're working with a hotel in the process of converting 2 floors of a hotel from hotel over to permanent rentals, furnished rentals. And we advertised those 2 days ago, and as of this morning, we have received 30 inquiries already. So there's demand there. However, it does dilute the pool for investors of traditionally long-term investment properties. In addition to that, we've also seen where nervous and understandably nervous landlords who are somewhat affected by coronavirus themselves, just some sort of financial strain, or they're just naturally, worried about the long-term effect of it, making conscientious decisions with their tenants to either not increase the rent on a lease renewal or offer a reduction to their tenants. Say, look, Terry, we're wondering if you want to stay on for another 12 months in the property, and we're willing to reduce the rent by $10 or $20 a week as a bit of incentive, because they're concerned that those tenants, what we've seen with this influx of Airbnbs and hotels, short-term accommodation entering the market, plus tenants, a portion of tenants directly affected by coronavirus, excuse me, renegotiate rents. Across the board, we've seen rental prices reduce slightly. Now, with that combined with increased vacancy rates, a bit of a recipe for disaster. You could easily take 10 or 20% off the value of your rental property and possibly have it sit on the market vacant for a month or two at the moment, and that would be an average loss, somewhere between $8,000 and $10,000. $2,000 to $4,000 to $6,000 for the average investor. And when they may have been laid off or stood down, or had to renegotiate their own wage, typically not a problem to tap in and top up your mortgage. At the moment, it would be a problem. The last thing they want to do is default. So generally, we're seeing the rents come back. Vacancy rates increase.
But the vacancy rates have increased more in the inner city areas. I think that's common to all the major cities of Australia. The CBD and near city areas have had significant increases in their vacancy rates, but perhaps much less so in the suburban areas.
Yeah, it's just due to the nature of the demographic. Terry, I think, less universities, less inner city workers, less impacted, looking for more stability. Two income earners as opposed to one possibly, or something like that. So yeah, that's generally what we're seeing, and probably not a bad time to put in there that, look, as far as investing goes, the diversification for people, and between purchasing in one suburb over and above another, and I'm sure that that's some information that you cover in some of the reports that you provide, Terry.
Yeah. So what the research data does suggest that while we're not seeing a great deal of impact so far anyway on real estate prices, sale prices, rentals have dropped in certainly in Sydney and Melbourne. So rentals are being impacted by the current situation more so than prices. Is that what you're finding?
That's correct. Yeah, I think Brisbane was somewhat insulated. I wouldn't say vaccinated from this crisis, but we were somewhat insulated from it in that we were fortunate enough to be in a position where we were heading into, on the property clock, we were 9, 10 o'clock or something, we were coming around the corner and you could see the daylight at the end of the tunnel, and there's a lot of positive media and key economists and industry experts. Brisbane was starting to see some, albeit moderate but substantial growth compared to what we've seen over the last couple of years. So that has definitely helped. I was surprised to see the amount of transactions. There's some people I knew in the week before lockdown or maybe the week of lockdown, neighbours of mine turned up and bid at a property. They weren't intending to bid at auction, but they ended up bidding at auction because it sold for about $100,000 less than what they thought. But there's still demand there. People, births, deaths, marriages, people upsizing, downsizing. The benefit in Brisbane that I'm aware of, and I would dare say it's similar to Sydney and Melbourne, is that supply and demand, as we all know, dictates market price. Now, the supply of available sale properties in Brisbane has been very, very low. The demand has been relatively high to the situation, and that has resulted in sellers achieving good returns on their sales and upholding a good average sale or median sale price. The same can't be said for the reasons we alluded on earlier. The oversupply of rental properties has meant that there's been a negative effect on the rental market. But look, that will come back. We know that the saying "safe as houses" comes from the fact that the rental market, as we know, as it always has, recovered, and it'll come back, I believe, in Brisbane stronger than it was before.
Yeah. So we just got a question from Linda which relates to commercial tenancies. Do you do any of that at all with Bluestone, or was it purely residential?
Purely residential for us, but I am aware of that, and I think it's a brilliant question Linda's mentioned there. That will the due to circumstances and everybody working from home, will we see reduced demand for office space? I heard on the radio, it was a podcast I listened to the other day, the figures were somewhere around about 5 to 10% of the average workforce around the world are working from home normally. Now, they are predicting that in Australia that we could see around about 20 to 25% be the normality after coronavirus.
Yeah. So certainly it was a trend anyway, I think, wasn't it? More people working from home with technology, or at least working part of the working week from a distance and working remotely. And the forced situation is likely to enhance that as a trend. So we're going to be perhaps seeing more people. It doesn't suit everybody, and I've heard mixed types of feedback about it. Some people absolutely hate working from home. particularly if there's kids at their feet while they're trying to do it. But for others, it's a bit of a revelation, something they might seek to make a permanent situation, and that their employers might see an opportunity to reduce the amount of office space they need to rent, and therefore reduce their renting costs.
Yeah, I agree, Terry. And I think for me, the way I see it, the catalyst was that this crisis has forced those businesses that hadn't adapted to the work from home environment. It has forced them to. You know, they might have had plans to sort of go to that space in 6 or 12 months' time, or no plans at all. But coronavirus has forced them to go and put these measures in place. Now, an indication, office works type businesses sold out of desks and filing cabinets and work from home chairs and all of these different things they sold out of. Now, I think that, look, business and everything is, people are adaptable. We saw businesses, like cafes turn into takeaways, and businesses that require all of their staff to work from within the premise set themselves up to work from home. I definitely think that there will be a lot more vacant office spaces available, but I also believe that the owners of those spaces will find a way to work with the councils for relaxations for them to be able to use them in different ways and shapes and forms. So we had an office space in the complex that we rent here, where the landlord converted it into an Airbnb about a year ago and successfully rented it as an Airbnb. They couldn't lease it commercially. And that ended up being more profitable for them than if it was a commercial space. Now, there are some restrictions around what you can and can't do in Brisbane City Council around that. But another one I know of was that people may be familiar with was industrial space. A lot of those had been rented to gymnasiums. Now, the Brisbane City Council had put restrictions on gymnasiums being able to rent those spaces, but I see them doing some backflips on those types of arrangements to accommodate, what's come from the coronavirus.
So, Mark, we're just coming up almost exactly on the hour. I just wonder whether there are any other key points that you wanted to make that you haven't made yet in terms of residential leasing, what landlords need to be made aware of, or whether we've covered all the main points.
Yeah, look, Terry, I think I've covered everything today. And if people are confused, that's okay. If the listeners are confused today, that's okay, because I'm not too big a person and too ashamed to admit, with all of my experience, I'm confused. It has been tough. It has been extremely tough, and I've had a lot of sleepless nights, trying to translate this information to our property managers and then translate it to owners and tenants has been, extremely challenging. So, look, I don't want to confuse anybody anymore, but look, invest in a good property manager. They're worth their weight in gold. I've lost count of the amount of times I've seen private landlords or people who go through cheap agencies, low property management fees. You get what you pay for. At the end of the day, we're property managers are professionals. We keep up to date with the legislation. I've given some classical examples today. Now, for all of our sort of, we would have out of 350 properties, the 60 to 80 that mentioned hardship over the phone or loosely in an email, or the 26 that wrote an email and the 2 that applied. We've got 10, 11 floating around, 10 or 11 tenancies totaling around about $7,000 to $10,000 in arrears any given day. Now, if we average that out at, say, we end up with 5 owners at $2,000 loss, that's more than a year's management fees. It's a small price to pay for a professional to provide advice like it is. You just don't run up and buy an investment property in any suburb. You come and speak to someone like yourself that can tell you, the top 5 suburbs to buy an investment property in, and mitigate some of that loss for you, increase your chances of getting a successful result. So, like I said, I'll make myself available to anybody for a phone call or email after this.
Okay, Mark. Well, anybody who does want to follow up and ask further questions or have a chat about services you provide, what's the best way for them to get in touch with you?
Yeah, the best way, either phone or email. So my phone number is 0439 979 095. Say that number again, 0439 979 095. My email is mshorrock @bluestone, BLUESTONE, P for property, M for management.com.au.
Okay, so it's mshorrock@bluestonepm.com.au. And if they'd like to just phone you direct on your mobile, 0439 979 095. Okay, well, I urge anybody who's got further questions or points of clarification to contact Mark either by email or by phone call. Thanks everyone for your participation today. Thanks for your questions. Thanks, Karina, for your kind words at the end there, thanking us and showing appreciation for the answers to the questions that you got today. And I hope others have found it useful. John and Stella saying thanks, Terry and Mark, great information. So it's good to know that there are people out there who are watching and listening, got some value from it. Thanks in particular to Mark Shorrock from Bluestone Property Management, and I encourage you to follow up and make contact with him if you have further interest, further questions. But we've just ticked over the hour, so I'll wrap it up now. Thanks, Mark, and let's do it again soon.
My pleasure. Thanks for having me. Thank you, everyone.
Okay, bye. Bye for now.